So I just wanted to do a quick little wrap up here of Pips Wizard Pro, the links below, just to cover some currency pairs. Now I just want to make sure you understand that it is a trend following system. You certainly want to make sure the market's trending. And for that, I just throw on a 50 period moving average or a 34 period moving average, whatever moving average you want to use, and look at the higher time frame and only trade in that direction. Okay, there's nothing magical about a moving average. It just smooths out price, and obviously if price is trending up, the average price is going up, so the moving average is going to go up. Okay, so let's just start with the British pound, Japanese yen. So let's go. I'm going to look at daily charts only. If you look here, you use it on 15, 30, hourly, 4-hour, and daily. Okay, I'm looking at the weekly charts right now. So what I would do is I would come in and I would look here. I see we're trending down. So all through here, I'd be looking for shorts. You can see the moving average is flattened out right there. When you see that, you certainly don't want to be getting into the market. But if we just highlight, pretty much we've got this turn down. We go in through here, drop down to our daily chart and just see what kind of signals were there. We're looking for shorts. You can see all these orange. Once these orange squares print, those are going to be your short trades. You see there's quite a few of them all the way down here. For example, let's take right from the top. You trade this. I use stop orders. If you were in a perfect world to get this whole move down, that's a ton of pips right there, right? From this bottom price is 129.89 and you got in at 181. That's a huge, huge trade. Of course, you're not going to get all of that. You're going to manage your trade. You might get stopped out on these moves up, or depending on your trailing stop. But again, you would only take short trades on the British pound, Japanese yen. Let's take a look at the euro US dollar, which has been going through a consolidation lately. It's kind of a weird market. Go to the weekly. We're still looking for downs, right? You can see just by using normal price, you can see that you got a range going on. And when you can do that, you don't trade inside of this. And when you see price, it's a good proxy here for trend using moving average. If you see price going back and forth, just stand aside until price is starting to move away from the moving average. And let's just go right here. So we don't even be looking for shorts, right? On the daily, let's see what happens. It may not be pretty. Your short is on this one here. Price does go down 174 pips. You have a short sitting up here and through here. It actually just set up, and you can see it's gone against you as well. No trade's gonna be perfect, that's for sure. Let's look at the euro against the Great British Pound. Get rid of this. Same thing. Go to the weekly. You look what the price is doing all the way up through here. Even through here, we're still up, right? We're still uptrend. So you'd be looking at trading only long trades. Once this turns, makes a turn. Let's just do that. It may have been back here. You noticed it, or you saw it start and turn. Once it broke this high, right? Price starts making higher highs. That's certainly that's a way to do that as well. Just use price action, right? Higher highs, higher lows on a higher time frame equals a uptrend. So on the daily, you'd only look for long trades. And you can see that all the way through here. All the blue ones is what you're looking for now. The 195 pips there. You got some trades here. Now there's different ways you could trade this. You could trade it for certain profit targets, or get out when an opposing signal occurs, like it does here, right? You can trade it that way. So let's just grab this one here. Line this up. You'd get 141 pips on this one. Let's say you get in this trade here in the blue dot. Going to the lows, 122 pips there. This trade here, until this one, this is 450 pips. So you can see that it just, you can certainly make some money with this. Let's look at some Aussies. I'm a big fan of the Aussie. Let's see what we got here. Let's go to our weekly. Slopping back and forth. Perhaps you'd say, okay, you know what? Until we get some moves away, we start taking out lows, right? Because even though it's chopping around here, now you can start putting some lines in, right, for your range. Not just simple price action trading. and you're going to wait until it breaks out of this range that it's in right now. So for the Aussie US, you'd step aside, even though on the daily chart you may get trades that look good. Let's look at the Aussie yen, another trade, currency pair that I'm a big fan of. Let's see what we got with this. Okay, let's go to our weekly. Again, all the way through here looking for shorts, right? Let's see where we're going to look for longs. Let's say here, once price takes out this high right there, okay? So a break of this line. Drop down the daily chart. So where are we? We only have really one trade because this trade would have already been in play right here. You'd be trading the break of this, right? But since we don't look for them until this high is broken and this, we move past this red line, you may or may not get into that trade. It depends on how you trade this. You may say, okay, well, here's the high on this. I'm looking for long, so what I'm going to do is, because once I can start looking for long trades on the daily because the weekly tells me, once I break this high, maybe I'll take a buy stop above this and trade it high. You could trade that as well. So make sure you have a trade plan. The current one would be right here. You'd go long in this area here. You want to, depends how you're going to trade it. Are you going to trade long as soon as you see this? Or are you going to say, okay, there's the candle. Let me just trade a break of it, which you don't get to here. We get a rally of 127 pips. No orange one yet, but you certainly would have managed your trade by now, I would hope. So that's that. It's pretty simple. You know, it doesn't matter what time frame you look at, as long as you're looking at either one of these, the 15, the 30, the hourly, 4 hour, or daily. If you're going to look at the 4 hour chart, for example, for trades, that's really ugly. Right here, whipping back and forth. All right, this looks a bit cleaner, right? Cleaner price action. Maybe you go to daily and say, okay, what's the daily telling me? Well, it's kind of over through here. I'm not going to take many trades at all in the lower time frame because the moving average is flattening out. It kind of dips down here, takes out this high, so maybe in through here. On the 4 hour, you start taking trades to the downside. You see in through here it flattens out, so maybe you say, okay, you know what? Price is not really doing much. We're flattening out here. We're getting a retrace. I'm going to stand aside. So let's see what happens on the 4 hour chart. There's a trade right there. Shorting the low of that. You get out when the blue one shows up, right? So over here, yeah, like 20 pips. That's nothing. Then you get this trade here. It only goes to 24. Then you get a gap. Maybe it's just my chart. I don't know. If you're going to trade this gap, that's not a smart move to do. If that's a real gap, I don't know. Given the size of this candle, it very well could be. So maybe that wasn't the best example because of the gaps. But I think you get the gist of it. You know what? Download it, check it out, put it on your MetaTrader, just flip through the charts. You know, get your trade plan set up. Make sure you know how to manage your risk. Decide how you're going to manage your trades. Make sure you got proper risk protocols in place, and make sure you're trading a trending market. You know, markets don't always trend, and you really want to be aware of when they are, and then you can take advantage of this. All right, click below, download your copy of it, and check it out.